Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City, where we are all quarantined in our houses here, and it's the 24th of March, 2020. New York City is supposedly the epicenter of the coronavirus epidemic, here in the United States anyway. But Mrs. Taylor and I are safe and sound, seemingly, and taking all the precautions necessary to try to avoid this dreaded disease. And it is not to be laughed at. I believe that is very true. So I hope that many of you will take advantage of the interview I did with Chen Lin yesterday. It can be listened to at J. Taylor Media or on the J. Taylor Media YouTube page. It is a very good interview. Chen is providing some ideas about how you can profit from not from the disaster, but what opportunities are out there in the gold mining sector and in the biotech sector, which he follows very closely and has done very well for himself and his subscribers. So tune into what Chen Lin had to say. Very interesting interview at J. Taylor Media or J. Taylor Media YouTube page. We do want to thank our sponsors for making the show economically viable. Our sponsors for today, RN Resources, Ely Gold, Great Bear Resources, Hannon Metals, Irving Resources, Lion One Metals, Novo Resources, and Sitka Gold. Would also like to encourage you to send along your questions, comments, whatever they may be, to questionsfortaylor@gmail.com. Also like you to consider subscribing to my newsletter, miningstocks.com. I think there is perhaps no better time to do that than right now, if indeed today's volatile market, more than $100 jump in the gold price in Europe this morning, and now up around $80 as I speak to you on Tuesday, the 24th of March. I believe that we may be on to the next major run in the gold market, and the junior gold shares are still are priced very low as a result of the recent smackdown of gold and other decline in prices because of volatility or because of the liquidity squeeze that is ripping through our economy right now. We'll be talking more about that with Alistair McLeod and perhaps John Rubino, who will be with me in just a moment. I've titled today's show, Will Financial Cancer plus the Coronavirus End Fiat Currencies? And as I mentioned, John Rubino is with me, Alistair McLeod in the second half of the hour, and Ivan Bebek of RN Resources will be my guest during the second segment today. Elites are scrambling frantically to find and to keep their fraudulent pickpocket fiat monetary scheme alive as COVID-19 craters markets and the global economy. Last week, Charles Hugh Smith suggested that because this event, unlike the financial crisis of 2008, is hitting the real economy very, very hard, if the establishment wants to avoid a revolution, it is going to have to send trillions of dollars directly to the people rather than to the bankers. But now it looks like that may not be going to happen, as Democrats are trying to use this crisis to sneak through radical leftist policies like the New Green Deal and other things that they are fond and dear to their hearts. And the Federal Reserve, which is owned by the banks, has already promised to pump in infinite numbers of trillions of dollars into the banking system. Well, it seems to benefit the bankers and Wall Street more than the common folks, at least if it's like it was in 2008. So Charles Hugh Smith is saying they need to do it differently this time if they don't want to risk a revolution. The repercussions for the value of the dollar and perhaps the entire fiat currency system has not gone unnoticed, I believe, by the gold markets this morning, as I mentioned, up, I think, around $135 at one point this morning in European trading. All of this was predicted, of course, by Alistair McLeod and others, including John Rubino, who you'll hear from in just a moment. Certainly, a lot of our guests have been suggesting it's not a matter of whether it's going to happen, but when is it going to happen. So today, we want to focus on Alistair's most recent essay titled Payments, Panic, and the Ending of Fiat Currencies. And as I mentioned, we will talk to Alistair about that, as well as I'm sure I'll have some things to say about today's volatile gold markets. And as I mentioned, Ivan Bebek of RN Resources is going to be with me right after their first commercial break. They're doing some very interesting things down in Peru. They have a couple of really world-class, large-scale copper-gold targets down there. They are not in Peru working there right now because there's been a 2-week shutdown of the airports and the borders. So right now, ARN, like some other companies, are doing what they can remotely or whatever they can do until, and hopefully they'll be back to work very soon. But we'll be talking to Ivan about that in the second segment of today's show. But right now, I'm happy to tell you that John Rubino is with me. John Rubino of dollarcollapse.com. Thanks for joining me, John.
Hey, Jay. Eventful few weeks we've got here, huh?
Oh, I would say so. And today especially, well, at least in the gold markets. And actually, what do you think's going on? Because it's, it was like a few trading days back, it was nobody wanted to buy anything. They were selling everything under the sun. And even treasuries and gold were being tanked when people had to scramble for liquidity. Now, what do you think's causing this turnaround?
Gold and silver clearly tanked because people had to sell whatever they could sell, and gold and silver were assets that were liquid enough that they could get cash out of it. So that's what happened. This was very much like what happened in 2008 when everything collapsed at the same time, including gold and silver. And then it turned out to be kind of a V bottom where things just rocketed from there. So now we're seeing the other side of the V bottom where things start to take off. And as in 2008, the catalyst for it is the fact that governments are responding to the crisis with massive amounts of easy money. What we saw in the space of, just a couple of days here was first the Fed came out with the biggest QE program in human history. Right. And the Senate and the House are right now working on the biggest fiscal stimulus program in history. So in other words, they're going to just pour as much newly created currency into this market as they have to keep this crisis from turning into another Great Depression. Yeah. And that implies that we're choosing inflation as our big risk over depression. And that's great for gold and silver. When you're choosing to err on the side of inflation, then people are going to want real money. And gold and silver are historically the kinds of real money that capital flows into whenever people start to worry about the value of their other currencies. So this is playing out completely according to script. I mean, the only thing that's different is that the crisis isn't financial this time. It's a natural disaster. We've got a global pandemic. But in every other way, this looks very familiar. And because of that, how it progresses ought to also be familiar, especially in the sense of precious metals. These things are going to rocket if everything keeps going the way it's going. We're going to see new record prices for gold and possibly silver in the year ahead. And the little mining stocks. Jay, your list of mining stocks from your newsletter, they are going to be like the .coms of this coming generation. They're just going to go on a tear that most people can't believe.
Yeah, I think that's right, but we hope a few of them turn out to be the great gold mining companies, just as a few of those .com companies turned out to be major companies too in the future. So we try to pick the ones we think have the best chance, John, for doing well and for becoming real companies, not just exploration companies, but real producers. But I would like to just mention to my listeners now, with just a minute or two left here, that you have just put out an article at Dollar Collapse talking about high-quality gold miners and why that's important. Perhaps you want to comment on that.
Well, yeah, in times like this, you want the best quality to begin with because the world is very uncertain. Mm-hmm. And the biggest, best quality miners, like, for instance, Kirkland Lake, as an example, but there are a lot of others, have spent the last few years building up reserves that are profitable to mine at previous gold prices, like $1,200 an ounce. So now gold is $300 or $400 higher than that, which means that they're going to have very wide margins. Oh, and at the same time, oil, which is a big cost for gold miners, is way down. So their costs are down, their profit per ounce of gold sold is up. So their margins are going to be very wide, and their year-over-year earnings comparisons are going to be really impressive going forward if they're among the miners that are allowed to keep operating. That's the big key right now is will they be allowed to continue to work in whatever country that they're in? And so the miners who do get to continue mining in the coming year are going to be extremely profitable and probably really good investments.
Yeah, well, I would think so. Certainly, the ones that are producing now, it's going to be an issue. I think that most of the companies on my list have put out statements about their policies, and so we can certainly, the gold mining industry, like many others, almost every other industry, is going to be dependent to a lesser or greater extent on how quickly this coronavirus can be gained. We can gain control of it, but. I know Chen Lin was talking about some of the royalty companies. I think you like some of the royalty companies as well, right? A safe way to play the industry.
It's a great business model because they don't have to worry about the vicissitudes of any one mine, because what they do is basically buy little bits of the future production of lots of different emerging mines. So they're diversified. They tend to cut deals that are very favorable when prices start to rise, and that's what's happening with a lot of the streamers right now. Their profits are up, and their finances are getting stronger and stronger, which allows them to continue to buy new streams from other mines, and so they get bigger and bigger and more profitable and over time, and because of that. They've had some great runs already, a lot of them, but there's really no end in sight. They can continue to do well going forward. Oh, Jay, one quick thing, if we've got a second.
Yeah, sure.
I called your category of exploration and juniors in the mining sector the .coms. I didn't mean that in a pejorative way. Not that they're going to go bust, but that they're going to rock it. Yeah, okay, good.
No, I realize that, but it's also true, John, that the vast majority of exploration companies either find something and are absorbed by some other company, a larger one, and many of them don't make it. I mean, it's a high risk. You don't get the high returns without the high risk, I should mention. So that's why I think, companies like Ely Gold, which I think is one that you liked in the past, they're a sponsor of this show. I looked at that and talked to the company last week, and I must say I was just really impressed with the, with the growth they have in their pipeline. It's just pretty amazing. But as you say, these companies can grow from their cash flow, which means they don't have to go out and issue more shares. So you avoid the kind of dilution that you get with a lot of other mining companies that are having to build a mill and a mine and all that stuff. Very expensive. And ongoing capital costs. So a streaming company, for example, just simply keeps getting that to buy that gold at some discounted price, and it works really well. Our royalty companies, great model. John, one last thought, perhaps.
Oh, Jay, so many in this world. We're seeing financial history evolve here. This is going to be a time that historians are going to be writing about a century from now, because this is the beginning of the end of the fiat currency experiment. So. We should all enjoy this from a safe distance, because it's going to be fascinating, but be very careful.
I think a safe distance is a good way of putting it, John. Thank you so much for being with us, and we'll have you back again sometime soon.